Welcome back to Your Money, Your Call. My name's Sam Henderson, CEO and Senior Financial Advisor at Henderson Maxwell, and my panel of experts tonight are Adam Goldstien from Skeggs Goldstien and Ken Bloomfield from Financial Clarity, and they are here to answer your retirement, super and financial planning questions tonight. So do pick up the phone, give us a call, 1300 30 34 35, or you can email us at super@skynews.com.au, as Rob has done tonight. Rob, thanks so much for your email tonight. Rob writes, I'm looking for some guidance, please. Our self-managed super fund has a life insurance policy for both trustees. We are looking to see if we can withdraw money from our self-managed super fund to put it into an industry super fund to gain access to other insurance products such as income protection and disability insurance. Is this type of purchase allowed to be undertaken this way? If not, does your panel have some suggestions for us? Rob, thanks for the email. Let's see what the panel have to say. Adam, what are your thoughts on Rob's question?
So I think the question is, can he take insurance out through an industry fund via his self-managed fund?
I think he's wanting to take money out of his self-managed super fund and put it into an industry super fund.
Yep.
And then get insurance within the...
And then get insurance inside nice and cheap, which is actually a pretty smart way to do things,
no problem
isn't it?
at all. No problem at all. Just be careful of underwriting and medical limits and make sure you can do that before you go cancelling any existing insurance cover.
Absolutely.
Yeah, and automatic acceptance limits is one of the big things.
Definitely.
And compare the prices too. You know, some of them, they're generally very competitive for life cover.
Mm-hmm.
The issue with the income protection insurance, I think, is an interesting one because you're limited in what sort of income protection insurance can be held via those sorts of super funds.
Mm-hmm.
So you just need to look at the terms of that and how long it will pay.
Mm-hmm.
And there's no real advantage to holding income protection cover within a super fund. You know, generally it's better to have it externally. And
I suppose it depends how much you're earning as well, doesn't it? Because an income protection policy is taxable to the individual. It's also tax deductible to the individual, which is good. So if you do actually have to claim, you will pay tax on the amount that you receive, which is usually around 75% of your income, usually to a maximum of about $250,000 a year. Most of the insurance companies draw a line in the sand there. But these days, you can actually have a tax-deductible policy inside your super fund that is payable to age 65. That used to only be payable to for 2 years and be tax-deductible in the super fund. So, Rob, no problems with your strategy there, mate. Great question, and I reckon a lot more people should be utilising the advantages of industry super funds because they are pretty cheap.
My only proviso, my only proviso is that you are jumping out of a structure where you have almost total control over the payment of your death benefit.
Correct.
To a structure where you have almost no control over the payment of your death benefit.
Correct.
Depending upon nomination requirements and what you can do inside the industry fund. And not knowing what the family situation is, that could be a disaster. So again, just take these things carefully, get advice before you go doing anything like that at all. That would be my biggest concern.
I think that's always a message in anything that you need to do.
I mean, so, for example, they're young kids, for example.
Ex-spouses.
You know, ex-spouses, yes. But if, for example, we have a number of clients, one of them who the husband died in 1998, and he was fortuitous. He got cover within his fund. That has basically kept the kids educated for, you know, and they're now 25. The oldest kid just turned 25 and has access to the pension. So a bit of forethought enabled that to be funded via the self-managed super fund very tax efficiently.
Well, importantly also, Rob, if you have a self-managed super fund, it must have an insurance consideration at the very least, hopefully a policy, inside the self-managed super fund investment strategy. And no doubt, viewers, you all have written investment strategies, don't you? I know some of you don't, so please update them. I'd certainly like to see you make sure that they are kept up to date and regularly reviewed as per the law.